The S&P 500 daily chart price action has created the bearish divergence. You can see the upwards trajectory on this arrow from about December 26th, and I'll scroll down a little, and there's the AD line, a glaring bearish divergence, and the stocks above their 20-day simple moving average, bearish divergence. The MACD, another glaring bearish divergence. RSI, and on balance volume with bearish divergences. And that's not the call to jump out the window, but they can live on for a while, so sometimes it takes a long time to rectify these bearish divergences. So we'll have to keep an eye on that. And the S&P 500 daily chart has also printed the D wave up wave 5 and the D wave down wave C. And just like back here on January 4th, the all-time intraday high 4818.62. So we're within a stone's throw distance from there. And the Bollinger Bands for the daily chart are getting closer together, about 100 points apart, so that's getting almost close to calling an official squeeze. Price remains above the mid-band, so if it can do that, there could be a breakout to the upside, and another couple of trillion comes in off the sidelines. If it gets below the Bollinger Band mid-band and starts living below there and the squeeze keeps going on, then there could be a breakout to the downside. And the upper Stark Band and Channel 3 high are still traveling together pretty close. 4824 on the Channel 3 high, 4826 on the upper Stark Band. And the CPI report with headline inflation coming in a little bit hotter than expected, but core year over year met expectations. So there was a pause for a while, and then when the market opened, there was a pretty good downdraft to the downside, and then it recovered. So this is a very strong market, and price just couldn't get pushed above the ongoing supply line. So tomorrow it gets another chance, and all it needs to do is close above it. No extra requirements, as there was an up close on the bar before and a down close today. So all it has to do is close above this and it will become qualified. And it looks like the same thing with the ongoing demand line. Just get a close below that level and it gets qualified. Same thing here. And even though price ticked higher than this high back here, 47.93.30, 47.98.46, the zigzag didn't follow because we need to have at least 5 days in a row of higher lows, or the ATR4 comes into play, and with this lower low here, it's kind of starting over now, so it would take 5 higher lows in a row. So it was kind of a disappointment there. But if it does happen and get 5 higher lows and it's above this high back here, then the line for zigzag will just be straight. And if there's a downdraft and then 5 in a row and it doesn't get above this, then we could have the swing point to the upside here on this D wave, down wave B. That's in the future though. And here's the zigzag ATR4. You can see today the ATR4 was 48.99, yesterday 44.10, so that's one day. And then the day before was a higher ATR, so there's only one now, so it's got a long way to go to get a swing point. And another bad sign, price could not close above 4780.55. This relative retracement disqualified up 3. Had a close of 4780.24, so just by 10-20 cents. So that did not become qualified and confirmed. It has to start over, and it could become qualified again with a close above 4780.55 at end of day tomorrow on the 12th. We'll try it again. And having the shift over for D-Wave, the 5C, means that the ARC 0.618 bumped up, so that's at 4673.06, and the disqualified momentum down has a new level, 4672.64 for both 50% and 100% momentum down. And the trend factors have new levels, so everything got bumped up a little bit on this shift and a higher high than the previous high. So they're getting closer here, and hopefully there'll be really good support. And the QQE fast is trying to get back up above the QQE slow up there in the nosebleed section. So it's good to see that it's living up here instead of down here below 50, anything below 50, and that's no fun. So it's strong and staying strong and wants to get stronger. And again, with this lower close, 4780.24, lower than this close, that means none of these risk levels were qualified and confirmed, so the aggressive sequential, the aggressive combo, and nothing was qualified and confirmed, and they have to start over too. So yeah, closes above them for tomorrow on the 12th end of day will qualify them again, and it starts over. And in the S&P 500 weekly chart, there's one more day tomorrow, Friday, to get a close higher than this high, 4793.30. It ticked higher than that today, but it did not close above it, so we get a close above this high end of day tomorrow, Friday. Then this sequential sell countdown 13 prints, and that's pretty much exhaustion. So the overall take from all of this here is that the S&P 500 is stretched on the daily and the weekly, especially on the weekly chart. And that doesn't mean it can't keep going and get them recycled like we talked about yesterday. You can see that video. There's a link to it in the description, I believe. But yeah, it's getting up there. And if this prints on a close higher than this high tomorrow end of day, it could be an ominous sign, especially with that divergence over in the other chart over here. So we officially have a bearish divergence. A D line is not that strong. It's been going down for a while, and price skyrocketed. So this is classic mainstream bearish divergence here.